Morning. All right, I think that's better. All right, let's get started. All right, we had a big rally out of the US on Friday from pretty oversold levels. The S&P bouncing up 22 points, Dow up 185 points. So a pretty good day out of the S&P. Coincided with geopolitical tensions easing a little bit with Russia announcing a pullback of troops from the Ukrainian border. Um, Economic data once again highlighting an improving economy. We had non-farm productivity growing at a faster expected rate, and then we had the wholesale inventories for June coming in a little bit softer, 0.3% rise versus 0.6% expected. And then one more stock-specific point, McDonald's recovering from early losses after it announced worse than expected July sales. Out of Asia, green across the board. You can see the Nikkei having a crack over day on a weaker yen, up almost 2.5%. Aussie up just over 0.5%, along with the Kospi, and then the Shanghai and Hang Seng both over 1%. Shanghai Composite gaining after Chinese inflation for July remaining unchanged. Okay, then the chart of interest today is another one from our bearish website, zerohedge.com. So again, as Joe says, you don't really want to be looking at this one too much, but just showing high yield retail bond funds have seen 22 consecutive days of redemptions, which is pretty much a record, I think. And you can see, even when the market was crashing in 2008 and 2009, we pretty much double almost of the redemptions, or double amount of days of consecutive redemptions at the moment. So a little bit of nervousness in the markets, but I wouldn't put too much emphasis on this. All right. AngloGold Ashanti came out with earnings this morning. Headline earnings down 22 US cents. Bloomberg expectations was for 28 US cents. Revenue up 1.36 billion, which is better than expected. A dividend of nothing. Expected was 50 US cents initially. But the important thing for them is the all-in sustaining costs were down 19% to $1,060 per ounce. So some mixed results there. I'm not 100% sure what they were expecting if they did release a trading statement, so that shareholders were expecting a small loss in headline earnings, but I think probably further clarity is needed before you act on that. Successful trading update today. Headline earnings per share guided at 14%, or up 14%. Original estimate was for up 18%. Apparently there may be a once-off there. So again, maybe not as bad as initially as you see initially there. But yeah, further reading I think is needed before you act on that as well. ABLE suspended from trading effective immediately. I'm sure we all have read in the front page of the news today. They're being put under curatorship, and so we'll see. All ABLE shares will be suspended today. And ex-div today we've got Kumba 15.61, HTC 1.55. And not much on the key factors today. We've got Chinese CPI came in line, Japan tertiary industry index, Japanese money stock, and machine tool orders. So nothing that's really going to move the market today. All right, let's have a look at a few charts. First one I wanted to show was Barlow's. It's one we've been following for the last few weeks, sitting in a tight range between sort of $100 and $104. On Friday we closed just below $100. I think it was $99.75. The thing that worries me a little bit about this chart is this 50-day moving average that's just crossed over from the 200-day moving average, or crossed below the 200-day moving, which is, as you know, is known as a death cross, which normally signifies more downside or impending downtrend. But as long as it can hold this 100 level, it's still pretty bullish on the longer term. So if you see a reversal off 100, you can buy it, sell it hopefully closer to 104. If it breaks through 104, I would say it's a great opportunity to get long. If it If it closes a couple of days in a row below 100, then I would say I'd be very nervous and I'd be getting out. And while we're sitting in the same sector, we've got Bidvest. Bidvest showing a bit of a double top here, very important level here at 280. The height of the range is $20. So if we do get a decisive close below 280, we could be looking closer to 260 as a target, with the 200-day moving average coming more or less in the middle of that. Next one on the show is Impalas, another one we've been following a lot, and it's actually been a very difficult one to play. So we broke out from the symmetrical triangle a little while ago, as you would have known, and it hasn't been an easy one to play because it hasn't gone straight to the target, and we've had some vicious sort of move up and moves down. So it's been difficult to catch the trend without getting shaken out. But at the moment, I would peg this downtrend with the top end around 110, and possibly a target towards the bottom of around $100. So we're looking to play that range. Short around 110 if you can get a reversal off that level. We've also got the 50-day moving average at that level, just below there. So any reversals off these major moving averages or resistance could be good plays for it to reach its eventual target, currently at around $100. Next one on the show is Mondi. Mondi's been one that the analysts have quite like in general. I think they've got pretty good cash flow and a pretty solid business. Let's just zoom it in a little bit. We closed just below the 200-day moving average, but a pretty bullish reversal candle. If we get a close above this 200-day moving average here, I would like to see a little bit more of a reversal, perhaps up to at least resistance at around 192 as a first target. Old Mutual, another one that's sort of flirting with this 200-day moving average. It's also two standard deviations below on its sort of 90-period moving average, which is often a state of being oversold. If we can get a move above this, a nice close above this 200-day moving average, we could see a nice reversal in Old Mutual. If we go a little further back here, if I go 2 years, you can see how many times it's actually reversed off that. Don't too much here. You can see how many times it's bounced off this 200-day moving average. So in general, over the last sort of year or two, it's been a nice support level for Old Mutual. And the last one on the show was SAB. SAB, we put in a bit of a. This is actually the LSC, which is probably even better. It's showing a nice, not so nice for the people that are long. Head and shoulders here at the 32-pound level. 34.50 being the height of the head. So we're looking at it for a £2.50 reversal, coming in at about 29.50 as a potential target, but we are currently right on the 200-day moving average, so we could see a bit of a reversal from here, at least to go test the neckline. If we don't see any support coming in here for SA Breweries, we could be looking at another sort of £1.50 to the downside. And if we have a quick squiz at the breweries on the local one, you can see it's sort of broken down from sort of short-term support here at around 565, 570 level, where it sold off initially. We've also got a bit of a head and shoulders here, but not quite as well formed as the one in London. 200-day moving average coming at about 550. I think potential target from this breakdown was 550 as well. So more or less the same targets, give or take, on the local and the UK charts. That's all for today, guys. Best of luck trading.
What do you think of futures here? Is it worth giving? Just take the broadcast.